Bitcoin crashed 70% during the worst inflation in 40 years. Gold hit all-time highs. But here's what nobody's telling you. Both can protect against inflation, but one might destroy your retirement while the other preserves it. Today, I'm breaking down 50 years of data to show you which one actually works.
Welcome back to another Straight Talking episode. I'm the Diversify Guy. I've been calling it like I see it for years now. While traditional finance advice remains largely unchanged, I'm sharing information about alternative investment options that you might not know exist. Remember, do your own research. I'm not a financial advisor, just an enthusiast, so always consult with a financial professional before making investment decisions.
Today, we're settling the biggest debate in alternative investments: Bitcoin versus gold for inflation protection. I'm tired of the tribal warfare, the gold bug screaming Bitcoin is a scam, and the Bitcoin maximalists yelling gold is a boomer rock. We're cutting through the noise with hard historical data, real-world crisis examples, and expert opinions from both sides. By the end, you'll know which asset fits your situation or whether you should own both. Let's start with the obvious problem. Gold has 50-plus years of inflation-fighting data. Bitcoin has 16. Gold's 1970s stagflation performance is legendary. From 1973 to 1979, while inflation averaged 8.8% annually, gold delivered 35% annual returns. The metal surged from $35 per ounce in 1971 to $850 by January 1980, so 2,329% total gain. During this period, gold performed the S&P 500 by 37% during recessions. Meanwhile, bonds and housing lost 91% and 88% respectively when measured in gold-adjusted terms. The 2008 financial crisis showed similar patterns. Gold initially fell 28% to $730, but then exploded 163% from that trough to peak at $1,917 in August 2011. Fast forward to 2020 to 2023 inflation. Gold rose 32% in 8 months, from $1,575 to $2,072. Gold ETFs absorbed a record 734 tons, worth $39.5 billion in the first half of 2020 alone. And here's the kicker. Central banks purchased a record 1,045 tons in 2024, signaling institutional confidence at the highest levels. Now, Bitcoin's track record is more complex. During 2020 to 2021, Bitcoin exploded from roughly $10,000 to $64,894, a 548% gain that crushed gold's 48% rally. But the 2022 to 2023 inflation spike revealed Bitcoin's Achilles heel. As the Fed raised rates to combat inflation, Bitcoin plunged over 70% to approximately $16,000, while gold held steady. This is crucial. Bitcoin's correlation with inflation is strong at 0.8%, but its sensitivity to interest rate policy often overrides that relationship. Long term, though, Bitcoin's 5-year compound annual growth is 155% versus gold's 7%. Bitcoin has been the best performing asset class in 7 of the past 10 years. Here's where conservative investors need to pay attention. Bitcoin's annualized volatility is 50 to 54%. Gold's is 15.1%. That makes Bitcoin 3.6 times more volatile than gold. Let me put real numbers to this. Bitcoin experienced a 70% decline during the 2022 bear market, from $69,000 to $16,000. It dropped 21.6% in October 2025 alone. Gold, it typically maintains annual ranges of just 5 to 10%. Now, Bitcoin bulls will point to its sharp ratio of 0.96 for 2020 to 2024, which exceeded the S&P 500's 0.65. They'll tell you Bitcoin's volatility skews toward the upside, which is true. But if you're 55 years old with $500,000 in retirement savings, can you afford to see that drop to $150,000 in a single year? That's the question you need to answer. Let's look at what happened when currencies collapsed. Venezuela's hyperinflation exceeded 1,000,000% at its peak. The crypto adoption data reveals something fascinating. 92.5% of crypto activity flows through centralized exchanges, and 91% of transactions use USDT, Tether stablecoin, rather than Bitcoin itself. Why? Because Bitcoin's volatility makes it terrible for daily transactions when you're trying to buy food. Argentina faced 143% inflation in 2023. The country shows 23.5% crypto ownership rate. Turkey's lira crisis drove over half of Turkish adults to own cryptocurrency. But here's the 2022 failure case nobody talks about. Despite high inflation, Bitcoin fell 70% as the Fed raised rates aggressively. This proves that Bitcoin's correlation with monetary policy can override its inflation hedge properties during tightening cycles. Storage costs tell a different story. Physical gold, annual custody fees run 0.12% to 0.65% of value. For $100,000 in gold, you're looking at $490 annually. That adds up over decades. Bitcoin self-custody, a hardware wallet costs $50 to $200 once, no recurring charges ever. The risk? Bitcoin exchange failures like FTX resulted in billions in customer losses, but properly self-custodied Bitcoin with keys secured correctly has never been compromised remotely. Now let's talk about the elephant in the room, Executive Order 6102. In 1933, FDR required citizens to surrender gold, paying $20.67 per ounce before immediately raising the price to $35, a 58% effective devaluation. The penalty? A $10,000 fine, equivalent to $243,000 today, or 10 years in prison. This lasted 41 years until 1974. Bitcoin faces forward-looking regulatory uncertainty. The 2024 to 2025 environment turned pro-crypto. Trump signed an executive order for a strategic Bitcoin reserve in March 2025, and the SEC approved spot Bitcoin ETFs in January 2024. But Ray Dalio warns that governments can see who is doing what transactions on the blockchains. Gold's physical form provides anonymity that Bitcoin can't match. Tax treatment? This is huge. Bitcoin faces 0 to 20% long-term capital gains rates depending on income. Physical gold, maximum 28% as a collectible. For most investors, Bitcoin has a structurally better tax rate. Peter Schiff, gold advocate, called Bitcoin a cult driven more by hype than substance at the May 2025 Bitcoin conference. He's predicted Bitcoin would go to zero. His track record? Wrong. Bitcoin rallied 46% from October 2024 to October 2025. Robert Kiyosaki offers a different view. In April 2025, he stated, by 2035, one Bitcoin will exceed $1 billion, gold will be $30,000, and silver $3,000. He owns both, emphasizing, I focus on how many Bitcoin I own, not the price. Ray Dalio takes the middle path. In July 2025, he recommended 15% portfolio allocation to Bitcoin or gold combined, up from 1 to 2% in 2022. He owns some Bitcoin but still prefers gold, expressing concern about blockchain transparency. The consensus among serious investors? Own both. Here's the honest answer. Gold's advantages: 50-year proven track record, lower volatility, no technology barriers, physical ownership, universal acceptance. Gold's disadvantages: lower returns, higher tax rate, ongoing storage costs, business hours only liquidity, historical confiscation precedent. Bitcoin's advantages: superior long-term returns, 155% CAGR versus 7% for gold. 24/7 accessibility, highly divisible, lower storage costs, better tax treatment, absolute scarcity with a 21 million cap. Bitcoin's disadvantages: high volatility, 3.6 times gold, technology learning curve, regulatory uncertainty, short 16-year history, exchange risks, and it failed during the 2022 rate hike cycle. Both assets can protect against inflation, but they do it differently. Gold is the tortoise, slow, steady, proven over 50 years. Bitcoin is the hare, explosive gains but wild volatility. The data shows Bitcoin has delivered superior returns, but gold has delivered superior stability. For most people watching this, the answer is probably both in different proportions. Most importantly, and I can't stress this enough, do your own research. I'm not a financial advisor, just an enthusiast sharing information. Always consult with a financial professional before making investment decisions. If you found this breakdown valuable, hit that like button and subscribe for more no BS investment education. Drop a comment with your biggest takeaway. I'm the Diversify Guy, and I'll see you in the next one.